Cool. So, what's good, everybody? Welcome back to another webinar. So you guys already know how these go. So pretty much I'm going to be breaking down for you guys US 30, since I've been trading US 30, GJ and gold. So we'll start with US 30. So basically, what I've been looking at with US 30 over the last few days is I've been trying to actually short US 30 for quite some time now. It's been a little bit more difficult because price had been within side of this consolidation range, but it's finally now broken under that consolidation range, and we could start to see price potentially make new lows. Now, when it comes to US 30, because of everything that's going on right now, I actually do expect US 30 to have a big crash, a big move to the downside. So initially, my ideology with why I started to short US 30 is from a technical standpoint. We had price pull back into this 34,200 area, where we've seen price reject this area multiple times, again, over and over and over. And every time price had rejected this area, we've seen a huge move down from 34,200 to 32,300, let's call it, all the way, down here. Obviously, this would be a huge swing trade, so that's not really the move I was looking for. The move I was looking for US 30 was pretty much after price rejected these highs here, was for US 30 to come back down into this area of market structure, which it looks like that's playing out quite nicely so far. Didn't really see the momentum that I wanted to see when it came to this move, but it is August, and based off the volume index chart, right, you could just kind of look it up online. August is one of like the slower moving months for US 30 or for the stock market in general. There's just simply not as much volume. Now that price has actually rejected this level and we see price forming new lows on this 4-hour time frame, I'm going to continue to expect US 30 to actually go short. Now, realistically, the question is, where could we possibly see US 30 pull back to so that we could take advantage of US 30 to continue to go short? Because the thing about US 30 compared to any other pair out there, really, the risk to reward ratios that you could squeeze out of US 30 are just tremendous. They're ridiculous. So that's why I decided to continue to trade US 30, along with like having my own personal lifestyle change where I want to wake up, early in the morning nowadays, because I'm just starting to feel more productive and I get more done working throughout the entire day than throughout all night. So that's when I took advantage and started to trade US 30. Now, there's a few areas I'm kind of looking at US 30 here to pull back to. Ultimately, the best area for US 30 to pull back to before looking to continue to go short would be 33,800, which is kind of like around this area down here. 33,800 really would be like that first area I like to see US 30 pull back to. Pretty much just this entire zone that we have here with US 30, right? We've already had a small break and retest of this area, which you could see here, which is how I caught pretty much Friday's trade. And then price moved to the downside. But since it is a new week, and we're going to see a new weekly candle form, we have US 30 has the potential to pull back into this 33,800 area to make the week's high and then continue to go down and make the week's low. So if US 30 were to continue to keep dropping, realistically, the first area I don't want to see US 30 come down to is this first area of support at 33,500. And if price can successfully break 33,500, we'll look for the main target of 33,340 to be hit. So that's kind of what I'm going to be expecting with US 30. And then again, like when it comes to US 30, I like to be a little bit more aggressive for the entries so I could squeeze out as much risk reward ratio as possible. I'd really like to see another retest of this area, because then, it's a bigger discount than, just kind of selling at this minor break and retest, which I wouldn't even recommend selling at this minor break and retest, just simply because with US 30, the big moves are going to come at the major levels versus the minor levels, and you're going to be a lot safer trading at the more major levels versus trading at the minor levels. So along with that being said, again, we'll see a better risk reward ratio potential if US 30 could just kind of give us that retest of 33,800, then we could look to sell down to 33,500, which would be an absolutely huge move. So that's going to conclude US 30. Moving on to GJ daily time frame. So GJ, real quick, my bad. So GJ with the daily time frame, what we see is price initially reject these highs over here and then give us a big rejection to the downside. We see price on the daily time frame forming lower highs, also forming lower lows until this daily candlestick where we did see price actually form a low. More importantly, though, price did reject these highs twice, and it looks like price is just going to continue to keep trading lower. We could definitely see GJ form new lows. When it comes to this 4-hour time frame, we see an easy clear as day change in structure where we have a high, another high here, a higher low. Then we have a lower low, lower high, and now price is at a low. So the target remains the same. I'm going to look for price to come down into its daily support at 161,100, where we'll then have to wait and see what happens. If price comes to this area, then it could possibly reject and continue to go back up to 163,900. But if price breaks that area, then we can expect price to pretty much come down into its lows, maybe even this area right here. So let's call it 159,440. It would be the lowest point I expect GJ to actually continue to go down to, although that's a little bit of a stretch. A safer target would be probably 160 flat almost. That would be a lot safer of a target. So then you guys can kind of like be prepared for what we're looking at for the rest of the week in terms of like our more major levels. So you already know if 161,100 gets rejected, then you could look for it to go back up into its highs. If 161,100 gets broken, then just wait for the break and retest and look to sell down into 160. So on and so forth. You want to section off your major price ranges and trade in between your major price ranges. As of right now, I don't really see like a very clean setup on GJ. That's kind of like, yeah, clear as day. I mean, you do have this intraday level of support, but ultimately we'd have to wait and see what price looks like during the London session, because the Asian session is going to open up in the next few hours here, and GJ could just pump all the way up to here, and then it's completely different setup. So right now, I wouldn't really give you guys like a clear as day setup on what I would wait for, because I'd want to trade at the more important levels, right? I didn't take a trade here on Friday just simply because I was trading US 30, but this would have been the trade that I would have taken. Clean, crystal clear break and retest setup. Once this 4-hour candlestick closed, you could have immediately looked to go short. There should have been no reason for you to actually look to buy GJ once this 4-hour candlestick closed. You have market structure here, here, and here that's showing you clear as day support and resistance level. Price is making new lows continuously. That should have been signs for you to go short. There's really would have been no reason for you to look to buy GJ. Break and retest, you sell from that point on, and then look to target the daily level of support. And you could have potentially still been holding the trade. Although GJ didn't really move too much. It was only a 70 pip move. Now, with gold, so when I last saw gold continued to actually make new lows, broke under 1761 support, which at this point in time, we can expect gold to continue to go down. So it looks like this entire bearish trend is still very valid, where we have a high, a low, a lower high, then this could be a potential lower high point there. So market structure is actually pretty clean here on the daily in terms of the continuation to the downside. You can pull a fib, see price pull back 61.8%. Right now, though, a short-term target for gold would be 1722. That's where you can kind of expect gold to actually go next, because it is our next major area of support. So you could continue to look to short gold all the way down into 1722. In terms of a setup, really, I would like to see a retest, a lot bigger of a pullback. This is very steep. I don't like to trade these market conditions. If I'm not already short, then I really wouldn't look to enter a trade along this area. I would like to see a pullback into this range over here, basically, where we have all of this market structure here, and then we have a major area of support that was just broken under. So maybe a pullback into this area would be nice, and then we could look for price to go down into 1722 then and there. Obviously, you can also look to trade this from like an intraday perspective, but even then, like if you were to look for a break and retest, there's like, okay, you have market structure throughout this range, you have market structure throughout this range here. There's so many different possibilities. I'd rather wait for the best and cleanest setups, because that's typically where you're going to find the best moves. And obviously, when you have the best moves, you're going to have the best risk to reward ratio potential, and then you're going to have the more money pretty much you're going to make off of that specific move. That's pretty much what I'd wait for, a pullback into 1761, and then look for gold to continue to go down. Again, the long-term target this week we'd look for is 1722. So that's going to conclude the breakdown. Do you guys have any questions or anything that you would like me to go over?
Yes, Raul, can you hear me?
Yeah. What's good, bro? I'm going to assume he lagged out. Okay. So anybody else have any other questions?
Hey, Raul, I have a question, but it's a little bit more about the signals.
Okay.
On the signals, are you gonna start? Well, I haven't subscribed yet, but you're gonna send the US30 signals too.
Probably not, to be honest. Like the whole reason I have somebody else will have AB calling the signals in the signal room is because I would just want to focus on my own trading. You know, when you call signals, and I was having this conversation with James Storms the other day, you have to call signals for other people to make money. So it's never really going to be how I actually trade, because then I have to take into consideration like, oh, I don't want to call this trade because the stop loss is going to be too large, or, you know, there's different factors that you have to come into that will definitely affect my trading in a negative way. You know, so I most likely won't be calling any signals, especially that I'm in the middle of like a challenge right now.
Oh, okay. All right. Sounds good.
Hey,
Yo, what's
Rahul.
up, Rob? Go ahead.
Thank you, bro. Can you please repeat what you said about GJ and gold? I just joined.
Both shorts.
Okay, thanks.
Yo, what's up, Rob?
Good, bro.
I got a question real quick. How can I study a pair or any asset to develop an analysis to go to my favor? I mean, you study for a while, and it was useful to you to figure out how US30 works. What point do you take into consideration?
What do you mean?
Because I'm trying to study another pairs.
Okay.
So I would like to know how, which point do you have to take in consideration to make that study viable?
I'm having a little bit. Are you talking about what point do you take into consideration for you to actually start trading the pair live?
Yeah, because you're now taking entries on US30, but you are, I suppose that you have a long time studying that asset to trade in.
I mean, not necessarily. When it comes down to like me and deciding whether I want to trade a different asset or not, really, it just comes down to if I can actually read price on that specific pair. So what I'll do for, let's say, a few weeks is I'll trade hypothetically. So I would make an analysis on where that specific, you know, price will go. If price will go up, if price will go down, I'll look for the setups and I'll act like I'm trading that specific pair, and then come back to the markets later on and see what my performance looked like on that pair before I actually start trading it live. If the performance is obviously positive, then that's when I'll start trading it.
Okay. I'm asking that because I'm trying to look the BTC USD.
Okay.
I like all the move, and so I have make some money in that pair, but I don't really feel too comfortable taking higher risk because it's a higher risk asset or crypto. I don't know how to say.
Yeah, I mean, I would say like the more important thing to do when it comes to looking at trading new pairs, you have to find what time there's going to be volatility inside of that pair. What time does that pair move the most? What time do you see the big moves? And then you'll start to access when volume comes in. I can't necessarily speak on crypto in specific because since crypto is 24 hours, you know, you can have a move at 3 in the morning, you can have a move at 8 in the morning. But really you'd have to backtest when that pair actually moves and then trade it only during those times. Because what you'll find when you trade pairs outside of the times that those pairs normally move and those pairs normally have volume is that you're going to be stuck in consolidation, and you could have had a premature stop loss get hit and then price go in your favor, you know?
Yeah. It happened to me before.
Yeah. But
Thank you so much. No, go ahead. Continue.
Yeah, you just got to understand, like, you know, the stock market is different from the currency market, which is different from how commodities move, which is completely different from how cryptos move, you know? So more importantly, don't waste time, is just find one thing and stick to that market, you know?
Okay. Thank you, Raul, and thank you so much for the history that you posted yesterday. I mean, I guess because it really helps so much to me.
Yeah, I can understand how how difficult trading is, like especially in the beginning. You know, everybody has goals and aspirations and knows where they want to be in terms of like reaching a certain level when it comes to trading. And when I was first in the beginning, you know, I blew my first like $500 accounts, especially when like you blow account after account and you're not reaching your goals at a certain time frame that you want to reach your goals in. And then, you know, you feel like you're doing good, but then you're in a losing streak, and then you feel like you don't know what the fuck you're doing. And it's very difficult to be able to maintain yourself and really not quit. But I mean, those were pretty much like the two statements that kept me pushing forward. You know what I mean? Like I said, I always had like a 5-year goal in mind. You know, where can I be in 5 years if I really trade? I live and breathe trading, and I look to always continuously improve. You know, this is my mindset when I was only having like $100 days. Now I'm having $100,000 days. Like it's kind of average to me now. Now 100K day isn't anything crazy to me anymore. But when I first started trading like 5 or 6 years ago, I couldn't even fathom making 100K in a day. And now it's kind of just like, oh, cool, I just made 100K. You know, I'm gonna go get lit. You know, it's not.
Yeah.
Raúl, look at your youngest student.
What's good, bro?
Dile hola, papi.
Yo,
bro. That's gotta be your next student.
Yeah. What's up?
I was late, man. Can you show me US30 real quick, please?
Basically, I'm looking for price to pull back into pretty much this 33,800 level to look to go short again.
All right, sounds good, bro.
What's
On the 1 hour or like on the 4 hours?
It doesn't matter. Price just needs to,
All time frame.
All the price just need to fucking go back up and that's it.
yeah, it needs to pull back up so I can go short.
Okay, sounds good.
Yo, Raul.
Wait, my bad. I don't
Your mic is pretty bad.
mean to cut.
Yo,
I can't hear you, bro.
Yeah, we can't hear you. I don't mean to cut anybody off. Yeah, I think there's a lady that had a question. So ladies
Yes.
first.
Thank you. I did. What's the best session to trade US30, you would say?
The New York session.
New York.
Okay.
Okay.
New York at 9:30. 9:30, you need to have by 9:15, you need to have your position, and by 9:30, the spike happened.
Yeah.
Mm.
the
You
thing
don't
about-
have to have your position.
yeah,
but-
you gotta have your the thing about it is
You don't have to, but like ideally, if you're in the market before 9:30, that's good.
Yeah, that's first minute in the market, not really that.
I
ideal.
I have a question.
yeah.
Okay,
What's
thank
the
you.
best session to trade gold?
You could trade it either in the London session, but you're always gonna find more volume in the London to New York crossover. That's when you're gonna see the most volume come in on all pairs.
yo, Raul.
Yeah.
How has your approach to trading on lower time frames changed since you started trading US30 more?
Honestly, like when it comes down to US30, I pay attention to all time frames. Because when you trade US30, you have so many different traders trading US30, you know what I mean? So I really pay attention to like the 5 minutes. Sometimes I'll even go down to the 1 minute to look at volume. Like when it came down to me making the decision to close, because you have to like put yourself in the position that I was, you know, I was short on US30 pretty much throughout this entire range up here since this area right here. This is when I actually went short on US30 and I started taking my first short positions. So I went short here. And then again, I went short maybe somewhere along here. Price pulled all the way back up on me, but the trade was still valid. My stops were in this area here. I had a $25,000 stop loss roughly. And I knew that price was most likely going to come back into my entry when price or when the stock market did open up. But again, I was expecting, you know, the market to crash. So I wasn't expecting to make 100K. My expectation for this trade was to make $250,000, $400,000, right? So I was even thinking to myself, maybe a 25 pip or maybe a $25,000 stop loss is a little bit too tight if I'm really trying to swing it all the way down to here because of the volume that we see on US30. I mean, just look at what happened with FOMC, right? So realistically, like when it comes down to US30, I'm really paying attention to all time frames. And then when price pulled back on me, that's really when I was paying attention to the 5 minute time frame. Saw this candlestick go down. I was like, okay, I'm good. Saw this candlestick come up. I'm like, okay, I'm a little bit worried, but as long as price can maintain under 33,840, then we should be good. We should see sellers come into the market at this area here, because you got to think about it. Imagine how many people that are trading this asset are looking at this break of support, right? So where do you think the majority of the orders are going to come in if price is going to go short? Right here, right? Especially right after a clean break pre-market hours. So I was paying attention to it pretty much throughout the entire time. I really tried holding this position for as long as I possibly can, but price was really struggling to actually break under this level of support. So after price came all the way down to here, and you have to imagine like the swings in your P&L. So down here at this point in time, I was up like maybe 75,000. And then I was almost negative over here. Then it came all the way back down, up another 80,000, and then only up 25,000. So then you have to keep in mind, like, you know, it's a little bit of a emotional roller coaster, but more importantly, like you have to be able to maintain yourself as much as possible, really keep your emotions at bay, especially when you're trading a pair with this much volatility, you know. So I like to pay attention to all time frames. Ultimately, once price broke under, I was paying attention to the 1 minute time frame to see if momentum would actually continue to hold up, and momentum did not continue to hold up. So that's when I made the decision to actually close. And then, you know, I'm glad I did because price pulled all the way back. Sure, I could have probably made a little bit more. This would have been maybe a $50,000-$60,000 extra gain. But you know what? It was already Friday, and with this consolidation, I didn't really expect price to continue to move. So I made the decision I thought was best.
So do you take that same approach when trading other assets now, like using that 1 minute, 5 minute approach, or are you more like set and forget
Nah,
higher time frames when you trade other
like when I trade
like Forex?
nah, when I trade like GJ and stuff, it's mainly like 30-minute hour time frame.
30 minute and up?
Yeah.
Okay, thanks,
To
bro.
look for momentum.
Yeah, because the thing about like, you know, these pairs is like, I really like to pay attention to momentum, like on the lower time frames, to see if momentum is continuing to hold. Obviously, I still take into consideration like the higher time frames as well, such as the 30-minute and the hour. So like, let's say like the 5 minute is rejecting an area of support like it did here. I'll be like, okay, let's wait to see how the 30-minute closes. Hold all the way back up, pulled all the way down, say, okay, let's wait and see how the hour closes. Because you can get like a minor rejection on like a 5 minute time frame, right? And then you bump it up a time frame and see what that looks like. Then you bump it up another time frame, see what that looks like. So like on the 15-minute time frame, when price closed under support here, but gave me a little bit of exhaustion towards the downside, you know, well, I was already out by then, but I knew that, you know, price is most likely going to continue to go up. And the fact that, you know, look at this candlesticks, look how these candlesticks on the hour time frame are forming. Momentum is not holding up here. There's not enough volume for price to continue to go down, which is another reason why, you know, I closed that position. But I really like to pay attention to really all time frames when trading US 30.
I learned something today.
Yeah,
Raul,
Oh, can you break down GJ?
I already broke it down. I'm pretty much looking for shorts.
All right, thanks, bro.
Yeah.
So US 30 is obviously still in bearish structure. Looks pretty good to continue.
It does.
Yeah,
I'll
Raul.
see another retest.
Yeah.
Hi, Errol. Can you hear me, by the way?
Yeah, what's up?
I was just wondering, I'm having difficulties with like entry and take profit system. I was just wondering how, you know, you do your entry and take profit system, just have an idea. I know everyone's supposed to have different systems, but, you know, I want to have an example to follow, if you get what I mean, or how you trade.
Well, really, when it comes to like take profits and like hard take profits, it all is based off of levels where you're going to find buying and selling pressure. This is where I get in the market. This is where I get out of the market. So in terms of entry, I only sell or buy at areas of support and resistance, which is where I ended up selling in this area right here. Right. And then in terms of take profits, okay, where's my next level of support and resistance that we could see price kind of struggle at? To me, that was down here. You know, this was my first target on shorts. So essentially, I'm selling at previous broken support, looking for it to hold as resistance and looking to take profit at the next area of support. Does that mean that I'm going to end up closing here all the time? No, because, you know, situations change and I could take profit a little bit earlier. Because realistically, you're never going to go broke taking a profit. And especially like when you have different scenarios come into play, like timing, entry points, you know, volume, right? If it's all not there and it's not worth holding the position for that added risk, then you could close if you'd like.
Yeah.
No, but in terms of like hard take profits, you know, I'm selling at a level of resistance and targeting the next level of support.
So from the looks of it, is it like you take multiple entries at the area, depending on how aggressive or conservative it is, and then you have a final take profit, but you take partials in between, depending on how price reacts? Is that how you trade?
Well, No, I don't take partials because it kills the risk to reward. The only reason I take multiple entries along the same price point is because of slippage. Because my lot sizes are so big, I don't want my orders to slip and get filled in at a different price later on because it's gonna take more people in the opposite direction to buy my order for my order
Yeah.
through.
Okay, I see. Yeah. Thank you very much, by the way.
Yeah, no.
Jerome, can you repeat the last about the slippage?
I mean, realistically, you don't have to worry about slippage unless you're entering huge lot sizes and you have hundreds of thousands of dollars in your trading account. But to avoid slippage, instead of doing 100 lots, I would do 425 lots. So I get order filled in at the price that I'm trying to get in at right away.
Okay.
If I enter a trade at an 100 lot and there's not enough orders on that specific brokerage, because depending on the size of the brokerage will determine the slippage as well. If there's not enough orders on the opposite side on that specific brokerage, depending on the liquidity providers that they're using as well, then my order, instead of me buying GJ at 161,500, I might get filled in at 161,350, you know, just a random example. Or selling my bet. I don't know.
So do you just do 4 separate orders, like manually, like one by one by one?
Yeah, I'll literally just, okay, here's my entry.
Yeah.
I mean, you know.
Yeah, cool.
Raul,
Oh, sorry.
1 second. Raul, so I just heard you say that you don't really take partials, but do you have a rule about when to put your stops at break even when you're in a trade rather than just getting out of the trade?
It's a little bit tricky because, you know, moving your stops to break even too soon is obviously counterproductive, but moving them to break even too late is also counterproductive. Like, I'll give you an example. If I was still holding US 30 right now, my stops would be at break even because prices now made new lows, you know, but at that point in time, when price actually came all the way down to here, I knew that price could actually give me a possible retest, right? So instead of moving my stops to break even, I just kind of let the trade go because I knew that price would give me a possible retest again of this area before continuing to go down because I entered pre-market hours.
What do you mean let the trade go? As in, like, you took your position, you took your profits, or you just let it ride?
You have to let the trade, you gotta give price room to breathe so you don't get taken out prematurely. Because imagine if I would have moved my stops to break even here, I would have literally been taken out of the trade and then price would have gone in my favor. You know, I would have thrown away a 6-figure trade because I moved my stops to break even, which everybody's gonna have a different ideology and methodology behind moving stop loss to break even. But ultimately, you just gotta find what works for you.
Okay, thank you.
Yeah.
Raul, for US 30, yeah, because there's I mean, would you say that it's already somewhat pulled back?
No, because you go up a time frame and in the middle of the move. But then you got to understand too, like, you know, candlestick analysis as well. This weekly candlestick just or is about to open up. So most likely what it's going to do is make highs of the week. And that's where I'm looking to short. Same thing that happened when this candlestick closed. You could say, oh yeah, I pulled back here and then continue to go down. But look what happened the next week. It pulled back again and then continued to go down. Every week when the candlestick opens up, it's going to make a high and then it's going to make a low. Typically, if price is going to continue to go down, you'll see the high form at the beginning of the week, and then near the end of the week is where you'll see it continue to go down. You know, every candlestick is going to form that bottom or top wick depending on the side of the candlestick. So in this situation here, it's not a pullback. To me, this is an impulse to the downside. Now I would like to see a pullback into this area here before looking for the next impulse.
Yeah. All right, thanks, man.
Yeah.
Hey, Raul.
Yeah.
Could you please do your J?
Hold on 1 second. You can show us the US 30 zones, the 4-hour zones, or like the supply and demand zones.
I mean, it would always be better for you to make your own zones because you can't always be relying on me for your zones. I'm just kind of here to guide you through the process. What you have to do is literally go on the chart and look for the biggest. Okay. I mean, when it comes to USD JPY, what I could see is a break of this area of resistance where there's previous support. I mean, this is pretty steep. You would have to wait for a pullback. I would obviously wait for a pullback into the resistance that it just broke before looking for it to go up into these highs over here, possibly even up here. But this is not like a pair that I normally trade.
All right, thank you.
Yeah.
Hey, Ro, can you hear me?
Yeah.
Can you go over market structure on GJ and where we're currently at?
On GJ,
Yes.
I mean, everybody's gonna see market structure, very differently. Again, what's more important is that you have to identify your own market structure because when the market opens up and, we're in London session, I may tell you one thing and then you can see something completely different. So, I mean, what I could tell you right now, based off this 4-hour time frame, looking at these structures that we have high, lower, low, lower, low, and then we have a low right here. So this would be like your 4-hour market structure. But ultimately, it's a little bit more difficult to read this market structure because if you go to a daily time frame, price is moving sideways. This is not a trending market. This is a consolidating market. But again, when you have a consolidating market, you want to be able to read the candlesticks and what the candlesticks are telling you. So if you look at what this daily time frame is telling you over the last few days, that price is making lower highs clearly, and it's also making lower lows. So if price is making lower highs and lower lows, ultimately what you would want to do is look for a sell. Then you would have to determine where price could actually go down to and where there could be some resistance. That could be here, that could be here, that could possibly be here. You just got to look at your more major levels and see how these how price reacts at these levels.
All right, thanks.
Yo, Raul.
Raul.
Yeah.
Yeah, I've just have 2 questions real quick. One's about how you enter your trades with multiple entries. Do you still wait on like the lower time frames, for example, like the 5-minute to break structure each time,
No.
then you enter, or you just hit multiple lots on each trade and just keep going?
It depends. Once I see the rejection that I'm looking for, I'll just start entering multiple lots.
Or just enter multiple? Okay.
Yeah.
All right. My second question was, just getting out of a trade. Let's say, you enter a trade, for example, on that US 30, 33, 8, 30, and then you have your zone at the next level, 4-hour support. If you're, let's say your overall take profit was that 33, 330, and price came down to your first TP level, and the lower time frame rejects it first. Which time frame would you actually wait on to see a rejection to confirm that, all right, I'm getting out of this trade? Because I know that the lower time frame can just be noise, and you could possibly hold because it could possibly keep going further. If you
Yeah.
get what I'm saying?
I mean, it depends because like, let's say price approaches this level and it's an hour away from the 4-hour closing. I would like to try and wait for the 4-hour as much as possible. But if it's starting to reject too much in the opposite direction, then I'll probably just close.
Okay.
Yeah, but I'll only pay attention to like my levels on the hour time frame.
All right, no problem. Thank you, man.
Yeah.
Hey, Ro, for GJ, I wanted to see how you would look at the market structure from a higher low to a higher high perspective, or like on.
It's pretty simple. So we have high, lower high, lower high, low, lower low, low.
Right, but that's an hourly time frame. I wanted to know from a bigger time frame perspective,
What's your bigger time frame perspective?
the daily.
I mean, you look at the daily prices not really doing much here. The market structure is sideways. You have low, low, high, low, high, consolidating. So in a situation like this, daily market structure is not going to help you out too much. What'll help you here is support and resistance. Where you look at the market structures, the hour time frame, because then you can make a better decision on where price is headed towards. This is the information here is too compressed. It's not anything other than it's moving sideways. Literally, it's just doing this. This is the only information that the daily is telling us. What's more important though is, okay, the daily is rejecting this level and the daily is rejecting this level, right? How can we take advantage of this on the lower time frames? Well, we take advantage of that using the lower time frame market structure. That's why I marked off the market structure here on the lower time frame.
Got it.
Yeah.
Hey, Raul.
Yeah.
What do you do to not let, well, I could say, stop hunts affect your P&L when you're taking aggressive entries?
Bro, the thing is, like, if you're gonna get stop hunted, you're gonna get stop hunted. There's almost like no avoiding it unless you completely have like infinite money in your trading account and you just kind of let the thing ride and not trade with a stop loss. But then obviously that's completely pointless. What you would have to do and what I typically do if I get stop hunted, if the trade is still valid, I'll just get right back into the trade.
Okay, well, would you wait for like the your candlestick patterns on the 15-minute to take a more, I wouldn't say aggressive entry, but a conservative entry, or would you take another aggressive entry if you see one?
I mean, if the stop hunt already happened, then right once I see that my trade is still valid, and I see the rejection close like on the hour time frame, right? Then I'll just take a trade, you know, right there and there after the
Oh, okay. So you look to the higher time frame to see if you're getting on a rejection or a rejection within that candle close. Okay, all right. Thanks, man.
Yeah, you literally cannot avoid getting stop hunted. Stop hunts don't happen all the time, but obviously they do happen. When they do happen, you have to identify it and identify if the trade is still valid or not. If it's still valid, then yeah, you can get back into the trade, no problem. You know, if it's invalid, then you just don't get into the trade. But typically, if it's invalid, then it wasn't a stop hunt. You were just wrong.
Okay.
Yo, Raul, to add on to that right there, what about when it comes down to like sessions? I mean, you know, we're looking at price action, but then what about sessions?
What do you mean? What about session?
Like you said you'll take a trade right there and there, but what about if it comes down to if it's looking like an Asian session or something, a session that's not.
Well, I mean,
doesn't have a lot of.
Typically, stop hunts are going to happen right when session starts, right when New York session starts, or right when London session starts. That's when the most orders come into the market. I don't recall the last time I've seen a stop hunt randomly, you know, outside of session.
Can I add on to that?
Yeah.
How many rejections do you expect before you take the position?
Typically, like, let's say I'm buying GJ here and I'm in a long position, call it like right here, right? And my stop loss is, I don't know, let's call it here, right? Let's say this is my entry point. Let's say I entered off of a bullish engulfing. So let me kind of just adjust this. Right, this is my stop loss here. If I see this next candlestick do this, or the next candlestick looks like this, right, and it hits my stop and it closes up here, the trade is still valid. So right then and there, I'll just buy again, and then maybe adjust the stop loss to under that low. Does that make sense?
Yeah, but how many times is it before you enter that position? So do you accept for US 30, like, is it 3 times, 2 times, or? Just one.
Yeah.
Okay. Thank you.
Hey, Raul, one more question. In terms of your stop loss, do you have like a minimum set pip size or no? It's based upon the outside the range.
It all depends on the range and what the average candlesticks look like. Because if the average candlesticks are like this size, you know, I could probably set a stop loss that's a little bit smaller, right? Versus if the average candlesticks are this size, you know, I'm gonna have to use a lot larger of a stop loss. But more importantly to me, the stop loss has to make sense. The stop loss has to be wide enough to where I'm allowing the trade room to breathe, but not too wide to where I'm killing my risk to reward ratio potential. So, and when it came to this US 30 short and I shorted at this area, I felt as if a stop loss to here obviously would have been way too tight, but then a stop loss way up here would have been way too large. So in this situation here, it's kind of like a stop loss above this area right here, above these two candlestick wicks was more than enough to me. Especially like you have to take into consideration your targets, you know, my targets were all the way down here. So I was even comfortable putting a stop loss like a little bit up here, you know. Ultimately, your stop loss just has to go in an area where if price hits that area, you're wrong. And if we take a look at this on the 30-minute time frame, you know, if price were to came all the way up to here, you know, that's a push. That's a stretch. Look how far away we are from the zone already. I was going to be most likely wrong anyway, so I'd want to close my loser short.
Okay. Okay. Thanks, man.
Yeah, no
Hey,
problem.
Raul, do you think you could give a quick breakdown on GU?
I mean, GU right now, it looks like it's just making lower lows. You have this major area down here. It just broke under its previous day lows at 1.18695. What it looks like, but you do have to keep in mind that it is at this daily support level here. Really though, at this point in time, All you'd have to do is wait for some form of a pullback. This looks like a pretty solid area where you could wait for GU to actually pull back into before looking to sell down into the next level of support, which would be down here. But in a situation where if you sell at this red line, you know, you can look for it to come here first, and then you can look for it to go down here.
Got it. Thank you, man.
Yeah, Raul. I came in late. For gold, are you looking for shorts from like the 1760 area?
Yeah, I believe so. Yes, the 1760 zone, yep.
Okay, okay. All right. Just making sure.
Yeah.
Yo, Raul, I got a question in regards with the Level Up Society. So I got funded this last week. I passed my 2 stages, right? And I'm already trading with the real account, but I haven't received the certificate. The certificate is sent once I have my first payout.
Your certificate is sent pretty much right when you pass stage 2 and you actually get your funded credentials. I would check your like spam or promotions, because I know we're having a problem with the email systems, that a lot of the emails are going to spam and promotions for some reason. So just check there.
Okay, okay, I'll check, because I already started with the real account and I'm 2% up, but I haven't received the certificate, so I will check.
Yeah, worst case scenario, just contact support and they'll send you a new one.
Okay, thank you, bro. And I was going to ask you in gold, right? So you said that you were looking to short the 7061, you mean? Like
yeah, that area.
Yeah. 70. Yeah. So let me okay. Oh my god, I don't have the right internet right now, right? But I was going to ask about the stop loss, because in the 4-hour, si quiere, let the other guy ask you the question, en lo que se me actualiza la gráfica y te pregunto al final.
Yeah.
Yo, what's good, Raul? Yo, how do you go by your withdrawals? Like weekly, do you go like a certain percentage, or do you go by how much you made on a certain trade? So I'm trying to grow my account, but I'm also trying to withdraw. But I don't know, like what percentage, do I go by percentage, or how do I go by that?
In terms of like withdrawals?
Yeah.
Ultimately, bro, that comes up, that's up to you, you know, pay yourself whatever you feel is necessary. But ultimately, like, you do want to leave money in your account so your account can compound and continue to grow. But I mean, if you want to, you can withdraw whatever you want, you know what I mean? If you want to withdraw 50% of your profits every week or whatever the case may be, that's fine. Just know that your account is going to grow a little bit slower versus, you know, only withdrawing 25%. You know, it just ultimately depends. You know, yeah, it's completely up to you.
So I'm trying to grow it, so you'll say just like a 25% will be fine just to grow your account faster.
Yeah, 25, 30%, you know, withdrawals is, I think it's good, because you're leaving 60, 70% in your account, whatever the case may be, is 75%.
Okay, cool, thanks.
Yeah.
Raul. Okay, Raul.
Oh, yeah.
Can you hear me?
Yeah.
Question. So I did the leveled up challenge. It was like $600 or whatever. I've been still trading with my live account, so I haven't really had any focus yet on, you know, the funded account. If I don't touch it, if I don't use it, it expires. Like, do I lose the money? I got to pay again, or how does that work?
Did you enter a trade already?
No.
Okay, well, you have 30 days to finish the account from when you enter the first trade.
Right. So let's say it's like day 21 or something, and I haven't touched it yet.
No, you'll be fine. You have
Okay, so if it goes over 30 days and I don't make a trade, what happens?
nothing. You have
So
you have 30 days from when you place your first trade.
Oh, okay, cool.
Yeah.
All right. The other thing is that so, you know, obviously, you know, you want to set your stop loss at a decent, you know, a lot of times I set it too small and I get stopped out early, and you know, I've been getting better with that. But you know, as far as like when the engulfing candle and like a good time to get in, you know, because I've been finally understanding more about this levels thing, as far as, you know, like, okay, the move is like halfway through, so you're going to wait for the pullback, you know? And so I use like my Forex fund, you know, that profit calculator. and the position size. And so like I put in, you know, let's say my entry and then my, you know, stop loss, so I can have an idea of, you know, dollar value. And so if I want to do like say 5 lots, 6 lots or whatever, I know how much is at risk, you know, with say a small stop loss or a big stop loss, right? How do you calculate that for US 30? Because what I did is I did US 30 for the first time, and you know, kind of on your announcement, you know, that you did on Friday of the zone. So I waited and I got in around 795, like 795, and I sold it around 707. I stayed in the trade too long. I stayed in from, you know, the around, I don't know, 8 o'clock, like New York or whatever, right before New York, and I stayed all the way till about 4:15. There was a few times where, you know, I gave some back to the market. I should have closed. But I was thinking it was just going to keep going down more, and you know, obviously then about 4:15, so right before the close on Friday, I got out. So I still made 3K. So I sold 7 lots, you know, which was good. It's just I don't have an idea of what exactly dollar value, how to, you know, plan that, because I was trying to find all these calculators online, what I'm either, you know, positive or negative.
So download.
What was that?
This calculator works. So download this position size calculator, import it into your MetaTrader 4, MetaTrader 5. And when you go and set your stop loss, like how I have it here on the screen, it'll tell you the dollar value, what's a risk, and what lot size to enter. It's on the Discord. You can find it here.
Yo, does it work in MP5?
Yes.
And it's in the
Okay.
Discord and like the
Yes.
template thing?
Yeah, no, check the announcement tab.
Okay, it's been a while, or?
Yeah, it's been a while. I just put a period on it, so then just check on the main topic and enter it. But this
Okay.
it'll tell
Hey,
you
thanks, bro.
what process to enter and everything, so you'll be good to go.
Yo, Raul.
Okay.
Yeah, for like when you choosing your zones and stuff, like for the daily time frame, do you go from like the closing to the bottom of the wick, or like how do you choose like your whole zone?
Daily time frame, wherever makes sense to me.
All right.
There's no like specific methodology because it's an entire zone. It's just literally whatever makes the most sense to me.
All right, that's cool.
Hey, brother Ro, I have a question for you.
Yeah.
It's like more of a personal question.
Okay.
What throughout your whole career of trading, what pair do you think in Forex was like a pair that kind of respects what you teach in the DTI course, market structures, you know, break and retest, and doesn't take a lot of you know.
What do you mean?
Like, what pair would you say that it kind of respects everything, like respects market structure, price action, all that stuff that you talk about on DTI?
What
that you noticed?
I think he has something like the easiest or most, you know, the easiest pair.
Something clean and easy to read is what he's asking.
Yeah, yeah. Thank you. Like the most
just to read.
Yeah.
Well,
you know, US 30 has a lot of volatility.
I mean,
and GJ be acting up sometimes.
I can look at this chart and be like, wow, I love this market structure. It's so easy to read. While you're like, what the fuck is this pair telling me? Versus you can open up GJ and I can be like, what the fuck is this pair telling me? You're like, bro, it's so easy to read. Look at the structure. You know, ultimately, that's literally up to you. Like, it's all those questions are very subjective and individual to you. You know, you literally just have to spend your own time looking at each pair, which one's the easiest to read structure. You know, because like I said before, I could trade US 30 and read it like it's the back of my hand while you have no idea what's going on, and vice versa. You could trade GJ and read it like it's the back of your hand while I have no idea what's going on.
I hear you, brother.
You're reading a chart, be reading a chart though. Like if you can read one chart, shouldn't you be able to read all of them?
No, not necessarily.
Like obviously volatility comes into play and stuff, but shouldn't like candlesticks be candlesticks?
Not necessarily, because not every individual will be able to trade and read every asset appropriately. You know, like if I trade a random pair of GBP and GD, you know, it's like, this is disgusting. I wouldn't even look at this pair to actually.
Yeah, it's more like consolidated.
Yeah, overall, the
It
concept,
doesn't move as much.
the principles are the same, but if I trade a pair that normally looks like this, right?
Yeah,
and-
okay, I get you now.
And I open up a chart and trade a pair that looks like this, I'm gonna be losing more money than making more money. Versus a trader who trades consolidation and is good at trading consolidation, they would have made a lot of money trading this, and I would have probably, filed for bankruptcy. While a trader who trades consolidation is good at reading consolidation will have no
And they
idea.
wouldn't know how to read that.
Exactly.
All right.
Yo, Ro, I got a question.
You can do both. You can have that skill, consolidation and trends.
I mean, it's a little bit more difficult because some people are better, what's the term, long buyers. Some people are better short sellers, different traders. You can have a trader that typically they'll make more money in a bearish market versus making more money in a bullish market, vice versa. It all comes down to your personality, really the goal is to adapt to every market condition possible. But especially, imagine you're trading US 30 and you've been buying since July, since literally mid-July, you've been buying US 30. When price starts trending bearish, you're still gonna be like, maybe, buys can continue. And you'll continue to look to buy until, you take X amount of losses and until you really change your mindset and really adjust to the market structure. And that's where you have to survive the losing streaks. That's why I say risk management is key.
Raul.
Yeah.
So when you were saying about getting in, you always look at the 4 hour, right? So for example, let's say the last 4 hour before London, say 1 a.m. And I don't know if you get in then or do you wait till say open of London or whichever. You were saying about as far as multiple positions that let's say you buy with 10 lots or whatever, 10 lots, and then let's say the price is at, I don't know, we'll say US 30, we'll say 33,800, and it's, you're doing a sell, so you're selling 10 lots, and the move is happening. Do you then buy say 5 and another 10 or whatever immediately so that it's around 797, or do you wait for those small pullbacks in the 5 minute or something?
Every time I see myself scaling into a position, I typically end up ruining the trade. So I really try not to scale into positions all too much. Even though sometimes I'll scale into a position and it works out great. Really scaling into positions only works if the market's trending. Which in this situation, US 30 has been in the bullish trend for quite some time now. But I really try and stay away from actually scaling into positions or scaling into trades.
Well, because my question is when you take Instagram videos and you're showing that the corner of the screen, where you're closing positions and you've got multiple, 10K, 50K, whatever it was, you're and that's how you make 100 grand, right? Not all of it was US 30, right? Some was other things, right? Or was that all US 30? It was all US 30 for last week. Okay. Yes. So by doing that, you started your first position, and so what you were just saying is you don't scale in immediately. So I'm just trying to figure out when did you get those positions?
I enter multiple positions because of slippage. I enter, instead of entering 10 lots on US 30, one big ass lot, which will take longer for my order to fill, I'll enter smaller 2 lots, and that'll equivalent to 10 lots. It's all for slippage. That's why I have so many.
Oh, okay.
There's no other methodology or reason as to why I enter so many positions. It's literally all to avoid slippage.
So you're not actually entering 50 lots or whatever. You're still doing under 10, and you're taking multiple.
I mean, the way US 30 is calculated in terms of contract sizes is different from currency pairs. So 6 lots could be the equivalent to 60 lots on GJ.
I see. All right. Well, can we use GJ as an example?
Sure.
On average, do you you're doing over 10 lots, right? At a time?
I mean, at a time, I'm probably doing 50 lots, 55 lots set. Typically from my last few GJ trades, it was anywhere between 75 and 110 lots, maybe.
On just one position?
Well, not just one position on, scaled in positions in terms of like 25 lots. But one move, one trade, yes.
Okay,
right
and
there.
so how do you do that all on one like MetaTrader, or do you like have it like on a phone and because I do all my trading like on the iPad app. So I keep the screens open on my computer and then I put my trade in on the iPad app rather than like, in the MetaTrader. I mean, I don't know if there's a difference between it,
No,
but
it's
I get my lot size ready.
No,
It's the same, right?
same account. It's on the same account. I literally, if I'm gonna do 100 lots, okay, I'll go into my buy or sell on my my one click trading, 25 lots, buy, and I press it 4 times. And I'm 100 lots in.
Yeah, that's what I think that's what he was asking. It's like when you're at the price that you want to
okay.
get in and you want to do 10 lots, he's just asking if you do, let's say, 5 lots of 2 and just tap, 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 tap.
Yeah, but
Yeah.
you'll be filled in, no problem, even all the way up to like, probably all the way up to like 50 lots. You should be filled in, no problem. Once you start getting over 50 lots, you'd want to use multiple smaller lot sizes to get filled,
Wait a minute. So what you're saying is, so when I put my stop loss and my take profit and I hit buy, usually I don't do anything else. You're saying if I hit buy again, it'll do the same thing?
I have no idea.
I didn't.
No,
I'm saying like
it won't fill in the same stop loss and take profit. You got to manually put it in because when I put in trades on my iPad, you kind of have to click the pair and then add again and click the pair and add again. But on the computer,
right,
your mouse on the
right,
computer,
and that's
tap tap tap, and it's already done. On the iPad, it's a little longer.
oh shit, I didn't know that. Okay, gotcha. All right, now that makes sense. Thank you.
Yeah, that's why people were able to get into like certain positions faster because they just click the button, bang, 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 and they're already in. The iPad, you got to kind of like, it's like a little process. That's why I transferred from the iPad to now doing it on the computer.
Yeah, because I'm on a Mac, and so I mean, I got the app though, the MetaTrader 4. So it's the same thing on the phone, right? The iPhone, you got to do the same thing.
Yeah, you got to click it and then wait for the shit to pop up, then click, for multiple positions. On the computer, it's like instant.
Bro, I never use MetaTrader 4 on the computer.
That's the best.
Kind of fun.
I hate using it on my phone.
I just end it off my phone.
I use it on the computer. Then I look at my tray on the phone because I don't want to look too much stuff on the computer.
I got a Mac. I downloaded it. I mean, I had it up there, but I wasn't never using it, bro. I had it for like a week, and I'm like, nah, it's just so old school. It's like early 90s. I'm like, bro, what the? I'm like, nah.
Should I just get a Windows computer and
no, but you definitely can add. Everybody has Macs. You can add there's a way you can add MT4.
Yeah, I got it on Mac.
Yeah, no, I got it. It works. It's just I figured it was a little easier to do it on the iPad. I don't know. So, guess not.
So Raul, if I'm only trading like 8 to 9 lots, is there any point in doing multiple positions, or should I just stick to one position?
Until you're at like 50 lots, stick with one position.
Okay, cool, perfect.
And Raul, what do you recommend? Like standard, like as far, like what he just said. Like, let's say I did, I don't know, 5 2 lots or 5 1 lots.
You're better off entering just 1 10 lot. It's less to manage.
Oh, I see. Okay. Well, what's a good increment? Like 5 lots or 5 10? Well, you're saying up to 50 lots, right? So if I did like 5 10 lots, that would be like a max.
I would recommend doing 150 lot at that point. Once you get above the 50 lots, and that's when you could start, splitting your position.
Well, because I've actually made more profit by taking a few positions, but I had to do it the slow way, like we were just talking about. I had to go back in and do it, a stop loss and to take profit. And of course, the move already happened and I was down, let's say 10, 15 pips. Now I know why, because, of that issue with the iPad. But now I wanted to tell you that I finished last week with 13K. So it was pretty good week. I had maybe like 4,000 in drawdown, but I made 13. So I actually made like almost, I think, I don't know, 18 or something, 17, 18. But you know, with the drawdown, 4 or 5 grand, I still got to like almost 13.
So-
Yeah. Yeah. So gold, GJ, and that US 30, which was my first time. It's just like I said, I got to figure out how to, you know, calculate it better. So I, you know, thanks for you know, putting that thing up.
Yeah.
Yo, Raul, I got a last question. So we were talking about that we're looking for the pullback on gold on the 7060, right? But
yeah,
I identified an order block here around the 1663 level, and I had a 48 stop loss being on the 7068 level, but I'm guessing here that price is going to reject that area, you know. But as we can see, the 4 hour, the demand level is on the 7060. Do you consider having that entry above that area? It will be like more like a risky entry, because price already if si el price llega allá arriba, it already went up from the demand level, and it may continue. But having the stop loss on that level, do you consider that is a small stop loss? Because honestly, I don't like to have more than 50 pips stop loss. But if I extend the stop loss above the wicks on that lower high on the 4 hour, it's a 65 stop loss. And I consider that like too big.
I'm kind of confused as to what your question is.
Okay, the question is that if you consider the entry on the 7063 level is too high for shorts, or it may be a little more dangerous.
Talking about on
shorts. What?
Talking about on fibs?
No, I'm talking about.
Bro, I think he's talking about
If price,
Yeah, the rejection.
yeah,
of
if price goes above the 7060 level that we were talking lately, that it was the demand level.
He talking about the
price goes up.
You drew up.
Suggests that price is going to continue going up, but
yeah, but I'm confused because you're talking
here on the 4 hours.
About 7060.
1760.
Oh, I'm hearing.
Yeah, I'm talking about.
Yeah. His accent was throwing you off.
Oh, okay, my bad. So yeah, I mean, if gold goes above 1760, I'd be a little bit concerned to short or to continue to short, simply because it's now trading above its major area of support. I would like to see a break back under 1760 before looking to continue shorting. Because what can happen is price above 1760, come back down into 1760, form support, and then continue to go up from there. So as long as price can stay under that 1760 range, I'll continue to sell.
Okay, thank you. That was a doubt. Thank you, Long.
Yeah, no problem. My bad for not understanding your question a little bit.
Yo,
Hey, don't worry, bro. This is not the best, so I'm trying here my best. But thank you.
After prices consolidating from like 1772 to 1800, after seeing those rejections and the exhaustion, you know, it had like multiple pushes up. It had like 3 pushes up, and then it had like a lower high. Do you think an entry below 1796 was too aggressive after that bearish divergence on the 4 hour? Because we already knew it was going to reject. It was at like the weekly resistance. I'm trying to figure out what would have been like the best entry for last week.
Before the big move?
Yeah, before. Like, would you have waited for under 1786? Because I see like at 1796 is bearish divergence, and we already knew that it was like it was rejecting the level.
The best entry would have been
like by that orange line right there, exactly.
After price broke under support there, and
right
under, you go down to a lower time frame, wait for the pullback back into support, which essentially would have been this candlestick here, and then look for the rejection. Once you see the rejection, then you can sell, which would either here or here or here. This would have been like the best entry here, which I was going to take this trade. I don't remember why I didn't take the trade. I think it was because I was trading something. No, because I missed it. I wanted to essentially short inside of the range again because it had broken under. So it's like, okay, let's wait for pullback into the range. It pulled back, rejected, and then the price was trading around this area here. So I said, okay, I'll wait for another pullback into the zone. Price never came to the zone, rejected here. I didn't end up taking the sell because I wanted to see a steeper pullback into the zone. And then it just dropped. And I was like, oh, I missed it. And
So
then I
you think that
retest here, but I did not. Then you could have taken another one here.
no, it was clear bearish direction, but I'm saying like so you think the 1796 entry at the orange line would have been too aggressive? Because I peeped like a fake out for it going bullish, but then once I seen the immediate turnaround and broke back under that level, I knew it was gonna continue down. But then once it got to 1772, it broke my bullish trend line and broke structure as well. So that was like an obvious entry. I wanted to see if the 17 like the orange line was too aggressive to enter.
I wouldn't have been comfortable selling there because the structure was still bullish, so still being rejected.
Okay, good.
Raul.
Yeah.
When you say you take profits, so like let's say you're in the middle of a zone, like it hasn't fully hit that next level. If you were to close, if you were to close and take another position, then obviously your stop loss would be less because it can go, it could go back up, right, to retest. And then that's what's always been my issue is that if it's, halfway through a zone or a quarter or whatever, I try to get in, I can't get a good stop loss. So like, let's say 60 pips or let's say 30 pips, right? When you get in on a trade, and you get stopped out, is that or not stopped out, but you have drawdown? Is it because you're not watching it like crazy and another one has been doing better and that one kind of, I mean, how do you calculate that? Like,
Well, what is watching your trade gonna do to avoid drawdown or your stop loss getting hit?
well, like in the beginning, I was actually closing my trade in negative. In other words, like let's say 30 pips stop loss, and I was closing it when it was like maybe, I don't know, 12 pips in or something, and the price was negative. And then of course it went back, in the other direction. So I would have been positive, let's say.
That's completely counterproductive because if you have support
Right.
range here and you say this area right here, this white line right here invalidates the trade, you're gonna set your stop loss at this level because when price gets here, that's what makes the trade invalid.
Well, we can't look at your screen.
Oh, my bad. I got you right now. Anything before this area, the trade is still valid. So even if it does all of this, it doesn't matter. The trade is still valid. So you closing literally here, close. Another pullback into here, close. Another pullback into here, close, 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 close. Essentially, you're taking minor losses, which will add up into a big loss when pricing go in your favor. This happened to me before. You're paper cutting your account. And although you may make back this money, if price does move into in your favor, you're taking losses for no reason instead of just trusting your analysis. Essentially, what you're doing is you're scared of losing the money because you're not comfortable with the amount of money that's at risk. So you close early. At least that's what's based off of my experience. Because you have to remember, you set your stop loss in an area that invalidates the trade. So it doesn't matter if price is 2 pips away from your stop loss. If price is 0.5 pips away from your stop loss, you got to hold until your stop loss gets hit because you entered that trade and you determined that stop loss area in a logical state of mind. Once you press that sell button, you're no longer thinking as logically because you have live money at risk. And this is where you have to sit on your hands as best as you possibly can.
Hey, bro.
The normal thing to go through, especially in the beginning. I went through it. But again, I have somebody to tell me, what you're doing is wrong.
Me too.
Yo, Ro, I have just one last question.
Yeah.
Let's say you're gonna take a trade before, well, you saw a trade set up and you're about to take it. You take it at that near level of resistance, for example. And then let's say when you enter that trade, it starts to go down, but in the next hour, there is high impact news. Would you just come out or would you stick it out?
It depends because I mean, it depends because if you use the news to your advantage, like for example, CPI, right? If the CPI report was expected to be 9.1%, right? Which obviously is bad and it shows that inflation is continuing. But the fact that it came out at 8.5% should tell you that it's positive news and that the economy is somewhat recovering because, I mean, although inflation is still bad, it's not as bad as 9.1. So the stock market's going to rally and continue to go up. So in a situation where you're in a buy, if you see the CPI report came out at 8.5%, the stock market's normally going to go up. So you can hold your positions on US 30, you know? Or if you see news about rate hikes and you look to short, you know? Ultimately, like, it's very sketchy trading news. So that decision really is up to you, bro.
Yeah, because I'm not really much of a fundamental kind of trader yet. I'm kind of giving it time before I start learning about fundamentals. But as a technical trader,
Yeah. As a technical trader, it's best to stay away then.
just stay away. All right, cool.
Bro,
Thank
how do
you.
you feel? Do you feel like my fault? But do you feel like it's imperative to know news?
For sure.
For sure.
Be as informed as you possibly can. You know, I was always a technical trader. I've always been a technical trader. But over the last few weeks, I've been trying to get informed about fundamentals as much as I possibly can because it's only going to better my trading.
Yeah, since I watched Raja and Ted like pushes it. Like, how do you trade without knowing? You know, that's what pushes your pair, you know?
I mean, yes, but there's also a lot of people that don't take fundamentals into consideration that trade, you know, solely based off of technicals, and they make a lot of money.
True. But
you know, everybody, there's no one right way to trade. You know, you can have a fundamental trader that's making millions of dollars a year trading, and you can have a technical trader that's making also millions of dollars a year trading solely based off of technicals. There's no one right way of trading, but
every strategy is right. Every strategy works for somebody.
Yeah, if it's only going to help you, then why not? You know.
Bro.
Yeah.
So what would you say your main thing about having drawdown is? Because is it because you're, you know, like you know, I'm saying, like, obviously your analysis is really good. So I'm just wondering, like, on how do you, I mean, obviously we're always going to be winning and losing, but like, what would you say the main reason? Because, you know, obviously a lot of us, we have, we get stopped out because, you know, we didn't have the right, you know, level set or whatever, you know, that it was either too small or too big of a stop loss, right? I get that, but I'm just saying, like, for you, you know, what's the main reason why you know, lose money
So trading is all based off of probabilities, right?
Okay.
If your system has an expectancy to win 70% of the time, you're still going to lose 30% of the time. This is unavoidable. It's unavoidable. Right. It's unavoidable investing. You're going to take losses. What's more important is that you win more than you lose, and not even, because you have traders who only win 30% of the time, meaning that they win only 3 out of 10 trades. They lose 7 out of 10 trades. They lose 70 out of 100 trades. They lose 700 out of 1,000 trades and still make money and still come on top. Drawdown and losing is unavoidable. You're never going to have an 100% win rate, right? Again, it's all based off of probabilities. It's all based off of math. How much money do you make when you do win, and how much money do you lose when you do lose? If you win only 50% of the time, but when you win $3,000. When you lose $1,000. Ultimately, you're going to be profitable because the math is in your favor. That's how the casinos make money. That's how the casinos are always on top, because the math is always going to be in their favor in a long term. Sure, in the short term, you can lose 10 trades in a row, but it'll only take you maybe 4 or 5 trades to make those losses back plus more. You know?
So if you got multiple trades going on and you get, you know, stopped out on one of them and it goes in the opposite direction, do you try to, you know, continue with that same pair, or you just kind of move on? Because I know you said not to overtrade.
Over trading doesn't mean jumping pairs either. You know, it's not like I'm going to trade US 30 off. I took a loss in US 30. I'm going to go trade gold. You know, what I mean by don't over trade is just take 1 or 2 trades a day.
Okay.
Bro, I have a quick question, bro.
Yeah.
Do you attend like any business events or like any business seminars?
Not really, to be honest.
Okay. Now I was just asking because I actually got to go on Friday, but I'm gonna be leaving out of state. Have you heard of Daniel G, a salesman?
No, I haven't.
Oh, okay. Nah, it's because I had 2 free tickets. I want to see if you wanted them, but I mean, you could look him up, bro. I'll send you his page if you fuck with it. And
Where's it at?
Miami,
Oh, yeah?
Hilton. Yeah, Hilton, by the airport.
Okay, I know where that is. Yeah, sure, just send it to me. Maybe I'll pull up.
Yeah, I'll send you his page, and if you fuck with it, just let me know. If you I'll send you the tickets if you
Yeah.
want them, bro.
I mean, I've been invited to a few events, but I've never gone.
Yeah. See the comments. Daniel G's legit. Some people already know him, but yeah, I'll send you the tickets for free, bro. Don't
Yeah,
worry.
thank you, bro. I appreciate it.
Yo,
Oh no, I was just gonna say any plans for a meetup in the New York at all?
Say it again.
Well, because I'm up near New York, so I'm just saying like, is there any chance you guys gonna do like a meetup?
I actually don't plan on traveling anytime soon.
No. Okay.
What happened? What you mean? Sounded like he had a negative experience or something.
No, it's just my daughter's about to be born.
Okay.
That's right.
That's a positive.
Yeah.
Yep.
Yo, if it breaks above 1750, would you look to buy into 1760? Just wait for the higher time frame breaks above like 1760, like to break structure.
I probably would just wait it out until the next day and see what it looks like. Unless like it breaks above like 17, like 72, I still wouldn't look to buy.
Bro, with someone else want to say.
What?
No, I thought someone was speaking. But yeah. I was just saying with GJ at the moment, where price is at the moment, did you maybe see that as like a daily zone?
Yeah, I mean you could definitely look at it as a zone here on the daily time frame. I would still be a little bit cautious on buying. You could start to look to buy GJ. I mean, probably after the break of 162,450.
Yeah, I remember that zone from you showed it last week as well, the same kind of area.
Yeah, once it breaks 162,450, you can look to buy.
Yeah, appreciate it, bro. Thank you.
Hi, I wanna ask something. Do you place any trades on TradingView directly?
No, because I don't trade with brokers. TradingView offers.
Okay. Also, do you use any VPS for MetaTrader?
No, I don't. I just directly. Are you talking about a VPN or a VPS?
VPS.
No, unless you're running like an algorithm, you don't need to use a VPS.
Okay. Thank you. That's it.
Hey, Raul, question about fundamentals.
Yeah.
All right. So I mainly trade GU. I've been trading for about 1.5 years now, and I'm very comfortable with that. Gold and like GJ, right? So I want to get into fundamentals. I typically use just like Forex Factory, just look at some articles, things like that. If I want to get more into fundamentals, like what advice can you give me to go about it? Like, should I read stuff just like news articles on GBP and then also like USD, or what would you advise me to do?
What I've been doing is just reading up on the economy overall, how inflation affects certain currencies. You can look up on the GDP, you can look up on CPI, you can look up on rate hikes. These are all important terms to look at when you're talking about trading. So just start off by literally looking at what the terms CPI, FOMC, NFP, rate hikes, what all those terms mean and how they affect the market, and then more specifically how they affect the markets that you trade.
Bro, is there like a specific website you use to like check these things out?
No, not really. But for articles, I feel like articles, probably like the most important one is Market Watch. That's the one I use a lot. What else? I mean, there's so many things that you could look at. Overall, you don't want to complicate things too much. I mean, you can even look at like volume indexes. So like, for example, I was looking at the volume index the other day for US 30, where you could see, what months over the last few years have had the most volume with US 30 versus the lowest months that have had the least amount of volume for US 30. And August was one of those months. You know, so it's like, oh, okay, well, maybe we're not gonna, see the crash that I'm expecting this month. It could maybe happen next month. And next month, there's talk about rate hikes and stuff. So then that could negatively affect the market. Like, there's so many different things, bro.
Yo, Raul, good question, bro.
Yeah.
Do you usually avoid like holding trades over the weekend?
Not that I'd be opposed to it, but I need to have a really good entry for me to want to hold a trade over the weekend. Like, I was looking to enter US 30 along this area here, never entered the trade. If I would have even entered up here, where these are the two areas I wanted to enter on a short, then I'd be holding US 30 right now. But because I didn't get the entries that I wanted, then no.
Okay, I get you. And quick question, though, maybe you know, because I am actually holding a trade on GJ, right? And the actual price is way below my entry. And I don't know if it's because it's 5:58 p.m. or something. Maybe the market's rearranging itself, but like I'm literally like just $4 in profit. Has that ever happened to you before?
I mean, yeah, because you have spreads. Spreads when the markets close are inflated so the brokers can make money.
Oh, okay. All right, man. Appreciate it.
Yeah, no problem. All right, so I'm gonna end.